today we are talking about, should you lease a car through your employer? Novated lease, as it's otherwise known. The reason I thought I'd bring this up is because I was talking to a friend the other day about her friend who had been offered through her employer a way of leasing a car. And she was interested in buying a new car for herself, and she was just unsure whether novated leases were a good deal or not, or whether she should do the lease through her employer, or if she should just get a traditional loan and buy the car. So let's talk about that today. For those of you that don't know me, my name is Angela. I started the Money Messenger project as a way of imparting some of my knowledge about all matters related to money. I've got 20 years experience working in financial planning. I'm a freelance paraplanner, which means I type up the financial plans that other financial planners present to their clients, detailing recommendations on how to save money, repay debt faster, grow wealth, and get ready for retirement, things like that. So the Money Messenger project is a way of just sharing some of that knowledge out there with you and the masses. I ask all of you to please do me a favor. If you enjoy these videos, please tag a friend in this video, someone that you think should watch the video, regardless if they particularly need a novated lease or a new car or has some tax issues, but maybe they just want to know more about money, and this video could be a good introduction. So for all of you watching live with me today, please tag a friend who you think should watch this video. Let's get started. Today we're talking about, should you lease a car through your employer? Novated leases explained. So what is a novated lease? A novated lease is a form of financing for a car. The difference between this type of financing and taking out a traditional car loan is that the lease payments are made with pre-tax money. That means your employer deducts it from your salary and then calculates your tax on the leftover income. So essentially it makes your lease payments tax deductible. So let's explore that in further detail. Salary packaging is an employee benefit. It's a way that employers can add value to an employee's salary package without little problems to the actual business or a lot of additional costs. Now, if you work for a government department or a charity organization, you've probably already been told by your payroll department that you can salary package a number of expenses, which means you pay them with pre-tax money, and then your tax is calculated, so you pay less income tax. But for all the rest of us out there that don't work for a government department or a charity organization, which offers amazing salary packaging offers at times, for the rest of us, if you go and ask your employer if any salary packaging is available, usually there are still some benefits available with most employers. And one of the main ones can be novated leasing. Novated leasing will help you if you are in need of a new car. Now, when I say new, it doesn't need to be brand new out of the dealership. It can be about 8 years old or younger. But for the purposes of novated leasing, it's for someone who is interested in upgrading their car, needs a new car, needs to change their wheels. And it's a way that you can do it in a very tax effective way. To set up a novated lease, there's 3 parties to the agreement. There's the car, sale person, seller, the dealership. There's the financier, the person who's going to loan you the money to borrow the car. And then there's your employer. But the difference between this and a traditional loan is you're not buying the car outright and then paying it off over the time. You're leasing the car, essentially. You're borrowing the car. So the novated lease company will essentially buy the car from the seller and then lease it to you over a period of time, usually 1 year, 2 years, 3 years, or 5 years. The main difference is the tax savings. Novated leases can be an awesome way for you to make an expense which is not generally tax deductible. You can turn it into being tax deductible. So let's look at that further. With a novated lease, you simply pick the car that you want to, provided your employer offers salary packaging. You pick the car that you want to lease, and the arrangement is put in place together with your employer. It needs to be done through your employer. So if your employer doesn't offer any salary packaging, then this option is not available to you. But if they do, and often people have heard this through their payroll department when they've been introduced to what benefits the employer offers. So you find the car you want, you set up the agreement through your employer. Then when you're making the lease payments, your employer deducts it from your salary and you pay less tax because you pay tax only on the leftover salary that you're earning. And with novated leases, you also can include maintenance agreements, fuel costs, insurance for the car, registration for the car. All of that can be done through a maintenance package, which then gives you peace of mind knowing that your expenses are basically fixed for your car lease and associated costs. And the majority of those payments are done through pre-tax income. So say you earn 65 grand a year, your employer will deduct your lease payments and your maintenance agreement from your salary, and then whatever's left over, say it could be 10 grand deductions you've just scored there, then you're taxed on the leftover money of say $55,000. So it's a great way to save money. At the end of a lease, you're not owning the car. You need to understand that. With a lease, you're essentially borrowing it. Leases can be a great way if you want to commit to using a car for say 2 or 3 or 4 years, 5 years, usually 3 or 5 is the most common. You're committing to agree to use that car for that period of time. And then at the end of the lease, you have 4 options available to you. Number 1, you can start a new lease and basically trade in the car or through a private sale. You can extend the lease to cover the residual payment, and we'll talk about that in a minute. You can purchase the car outright and repay the residual payment, or you can hand back the vehicle. So you've got to be clear that you're not buying the car. You're essentially borrowing the car, but in a very tax effective way. Now, the residual payment that I mentioned, that's just that. At the end of the term, there will be a residual amount payable, and it depends on how long your lease is. But say, let's pretend we're talking about a 3-year lease. At the end of that lease, there may be a residual payment payable of between, say, 45% of the value of the car and 50% of the value of the car, as in the purchase price of the car. Now, those percentages are dictated by the tax office and some other agreements there, and it depends on how long your term is, for example. So we're going to go through an example of a 3-year lease as an example, just to give you some rough figures. So bear in mind, this is just an example. It will change depending on your personal situation, but it's very easy to find out what your actual figures are simply by going online. There's a lot of salary packaging companies out there, and they have online calculators which will give you an estimation, or ask your employer, your payroll department, and they can help you. So let's pretend you earn $65,000 a year and you want to lease a $20,000 car, say for a period of 3 years, and you estimate you drive probably 10,000 kilometers a year. So let's look at the figures. If you were to do it through a novated lease through your employer, you would essentially save tax of about $1,400 a year, because your payments would go through the leasing agreement rather than you taking out a loan and making after-tax payments for the loan to a bank. So you save about $1,400 a year. The cost to you for that car would be approximately $130 a week. Now that $130 a week covers your lease payments, your maintenance, your fuel, your registration, your insurance, pretty much everything. There's ways of tracking the lease over a financial year so that if your car is costing more to maintain, you might be asked to top it up with an extra amount. If your car's costing less to maintain, then you'd be reimbursed for the extra that you've paid. But that $130 a week is essentially your fixed payment for 3 years that you need to commit to for 3 years. But of that $130 a week, part of it will be paid from pre-tax money, which is tax deductible. And there will be a portion which will be paid from after tax. And also that covers any sort of fringe benefits tax that you may be payable. So everything's done for you. So over the term of the 3 years, and you do need to commit to the 3-year term or whichever size term you choose, that means you would have saved all up about $4,200 by leasing that car as opposed to buying the car and paying it off with a loan. Firstly, I want to mention the residual on a 3-year loan. A 3-year lease would be about 45% to 50%. So that means at the end of the 3 years, when your lease expires, there would be a balloon payment, a residual payment, a lump sum amount of between $9,000 and $10,000 payable by you if you want to buy the car, essentially. And that's because you weren't paying off the car over those 3 years. You were essentially borrowing the car, but in a tax effective way. And your maintenance costs, your fuel, everything was also included in that $130 a week. So at the end of the period, you can either refinance the car, upgrade the car, change the car, hand back the car, or you have to pay the residual amount for you to be able to buy the car outright. Then your lease would end. Now let's compare that to a traditional car loan. So I had a look today at rates, and I just used an ANZ Bank car loan with an example rate of 15.99%, which is pretty high, but car loan rates are pretty high at the moment. Let's go for a 3-year term. Your repayments for the loan would be $165 a week for 3 years at a variable rate. So that means at the end of the 3 years, you would have paid a total of $25,700, but you would have repaid the car in full and own the car. The car would obviously be worth a bit less than what you paid for it, because cars are a depreciating asset. They go down in value over time. But the difference is that $25,700 over 3 years, that doesn't include any of your fuel, any of your insurances, any of your maintenance, any car-related expenses whatsoever. That is purely buying the car and paying it off over 3 years. Compared to the lease, you would have paid over a 3-year term $20,000 in lease payments, but that would have included your fuel, maintenance, everything, lease payments, everything. You then have to pay the balloon payment, the residual payment of, let's just say, $10,000. So all up you would pay $30,000, but you would have saved about $4,200 in tax. So if you add that all up, your net payment, your net leasing costs would have been about $26,000. That would also include all your maintenance and everything like that. So leasing is more of a holistic approach, I suppose, to borrowing money to use a car, knowing that your payments are fixed essentially, but you're getting the tax benefits. And the tax savings is what makes the difference when it comes to novated leasing versus buying a car. When you buy a car, for most people, unless you're running a car through a business or something like that, it's not going to be tax effective. So you're going to be using after-tax dollars to repay the bank. There's no tax savings whatsoever. It's just after-tax money. So think novated leasing, think borrowing a car, using it for a period of time, but in a very tax-effective way. Now, the caveat to all of this, do you even need a new car? You need to assess that first, because the friend that was speaking to me the other day about novated leasing was asking for a friend of hers who wanted to upgrade her car. Now, this friend didn't actually need a new car. It's just that it was offered to her through her employer as an employee benefit. So it was quite interesting, the fact that you could get a new shiny car and save some tax money as well. But the caveat to all this is, if you don't need a new car, if you don't need to upgrade your car, if you don't need to spend more on a car, then don't. You would never enter into any agreement just for the tax benefits. So if you don't need a new car, don't go for a novated lease. There's no reason to get into saving tax money if you don't even need the new car in the first place. So this video goes out to those people that are in the market to buying a new car. I personally am not a fan of using finance of any nature to buy an asset that goes down in value, such as cars. I think cars should be paid in cash. So if you can't afford the car that you want in cash, perhaps you need to lower your budget. But even paying for a car, half of it in cash, is a great way. But for those people out there that do not want to own their car, they want fixed payments, they want the security of knowing what their estimated costs are going to be over a period, perhaps they have the lifestyle where they can afford to upgrade their car every 3 or 4 years, then this video is for you. If you're going to do a lease, then check out novated leases through your employer, as it's one of the most tax effective ways of borrowing a car for a period of time. Please comment in the box where you're watching from. I love hearing where this Money Messenger project is reaching to, where people are watching from. We can see how far this project is spreading together. And if you like this video, please join me next Wednesday. I'll be doing a different subject, different topic, different money matter. For now, I'm going to sign off and I'll say goodbye to you all, and I will see you next week. Subscribe to the Money Messenger website, please, www.moneymessenger.com.au.